Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. We're just going to be, taking a brief look at it today, mainly because, we did see some substantial movement in the price of oil. So if you guys were following that, oil futures went negative for the first time in history as the demand just wasn't there and future contracts were rolling over so people could avoid delivery. In the same day, I'm not saying they're correlated. I don't think they're correlated in any way, but we did see the 100-week moving average for Bitcoin hold some level of resistance recently. So we're just going to jump back in. So if you guys like the content, please subscribe to the channel, hit the bell icon to turn your notifications on, and like the video. And check out this Telegram channel here if you want to discuss these charts. So what we're going to do is we're just looking, we've talked extensively about the 200-week moving average being our historical support line, the 20-week moving average being our historical bull market mode support line back in the last bull market. Let me make this a log scale. So 20-week. And then the 100-week plays a critical role in transitioning between, say, the 20-week and the 200-week. So you can see it holds support and it holds resistance. It can. So we're going to go ahead and jump in. So one of the questions a lot of people have, right, is cryptocurrency going to react to oil futures dropping? And the short answer is it doesn't necessarily have any correlation to oil futures at all. Oil futures being down is just, part of that is just the noise of having to deliver the oil and people selling their contracts, rolling them over to the new contracts so they don't have to take on that oil. Because people are selling, there has to be some demand there. They have to sell to someone. Well, people just aren't buying. Industries aren't, their workers are at home. They're just not going through oil. They don't need oil, and everyone's neck deep in oil right now. And so that's why the futures crashed for this month on oil future contracts. But you can see that for next month, they're still above $20. They're not negative. They're not a negative number like we saw today. So with that said, it does not necessarily have to affect traditional markets. It does not have to affect cryptocurrency. With that said, we were holding that 100-week moving average. You can see when we were back at the 200-week, I said we're likely, the next target once we printed this candle here, the next obvious target was the 100-week moving average. You can see that we slowly went up to that moving average over the course of around a month. So we went from here to here over 28 days. It was a 28% gain. So if you bought down here at the 200-week, or even if you bought at the 300-week at that wick, then congratulations, you're up already significantly. Now, the price at the 100-week moving average is $7,068 according to the BLX. I'm sure many of you noticed the price of Bitcoin got around that level. It's hovered there for quite a while, but now we've seen it come back down some, down to around $6,800. So, this obviously begs the question, are we heading lower? And if you follow the channel, I look mainly at macro level analysis. I do not claim to have a crystal ball to know which way price is going to go, whether it's going to go down this way to hit the 200-week moving average, maybe going into the halving, or if we're going to gain some momentum and go up to, say, the 20-week moving average into the halving, and to hopefully spend several months confirming the 20-week moving average as support. It's unclear, but what I'm looking for people who are wanting to follow along is I'm looking primarily at what this candle is doing. If we print, if we start printing candles below the 100-week moving average, then I think, for me, the next obvious target would be going back down to the 200-week, which is at around 56.89. So if we were to do that, if we were to go back down to that level, then it would be approximately a 20% drop. If we were to go up to the 20-week moving average, then it would be approximately a 9 to 10% gain. So, if in terms of risk management, I just want people to know, this is basically what's on the cards. For me, I'm looking primarily at, we could go in either direction, but currently we are getting rejected by the 100-week moving average. We've gotten up to around $7,200, but we keep getting pushed back down. So if you're following along, continue to look at what's going on here so that you can try to identify quicker, because I don't make videos on Bitcoin every day. If you see a candle coming down to, $6,500 or something, or $6,000, then I would say there's a fairly good chance that we're going to go all the way back down to the 200-week moving average and test it as support again. If you look earlier in the cycle, back about a year ago or so, you can see we came down to the 200-week moving average. We saw a move up. That move up was, if we take a measured move, it was around, it was around to the candle top, it was around 28%. And then, dropping back down to the 200-week, it was around a 17-18% drop, something like that. So it looks pretty similar. You can see currently we went up around 28% or so. Let's draw the candle again. So from here, or the wick, or the measured move, you can see it's fairly similar, a 27% move off the 200-week. This time we're at the 100-week, which is, it was much higher before, and we've started to print a candle. Potentially, this could be coming back down. And if it does, it would actually be somewhat poetic in the sense of what happened last time, back in 2018, 2019. And you can imagine that, if we were to do this, if we were to come back down, let's suppose if we did, that it would take the same amount of time. Then, it took around 21 days. So if that were to happen here, we're talking, like 3 weeks. So basically, taking us right at the halving. So we would basically be going down into the halving and trying to hold the 200-week, for dear life, basically, at that halving. And you can see that it would actually very closely mimic this move that we saw last year. So let me know what you guys think about that in the comments below, how similar this upward movement we've had so far has been, and whether you think on the cards as they move back to the 200-week moving average as opposed to getting above the 20-week. At the end of the day, if you follow this channel, we talk about how ultimately these things are irrelevant. This is not a day trader channel. This is a macro level view channel to try to identify good times to get into the market. A lot of people out there work 9-to-5 jobs. Maybe they don't because we're in a pandemic. But a lot of people don't have time to day trade. They just want to look at the macro level picture, look at the risk of getting involved at that time, and plan accordingly. So at least be on the lookout for that move to happen, because if we continue to hold this as resistance and see these candles start to print downward, then I think the 200-week moving average is exactly where we're going to go. And you can imagine, something like that going into the halving. Okay, that's basically the idea that you might expect, and obviously that's a bearish scenario. I think it is at least somewhat reasonable to be. It's always good to be optimistic, I think, but at the same time, the world economy is in a very fragile state, as we mentioned. Oil has certainly taken a hit. The economies of the world have basically come to a standstill. And if people have trouble putting food on the table, then they might not be purchasing crypto. Now, the obvious counterpoint to that is the people who are having trouble, are they likely going to be making a huge dent into the price of Bitcoin anyways? And I think that's up for discussion. It also could be the idea of people planning for something like that. Planning, well, if people can't put food on the table, then maybe they're going to liquidate their high-risk assets in order to have a little bit of cash. And Bitcoin is a high-risk asset. Ultimately, if you follow along, we are under the assumption, at least I am, that the next cycle peak is somewhere out here in 2023, probably at around 6 figures. Okay, so whether we go slightly up or slightly down in April of 2020 is completely irrelevant to what's hopefully going to happen out, that we're going to see a very strong move over the next 2 to 3 years. So, if you're buying, I would say just plan accordingly. Look for the low risk entry level points. Note that the 200-week moving average historically holds a decent level of support. We had a wick to the 300-week moving average. For those who are interested, because I know some people are unfamiliar with TradingView, for those who are interested in where the 300-week moving average is, it's currently at 39.10. And when I put buys in, I typically do it slightly higher. I would put it in at, say, 4,000 or so. Maybe slightly higher than that, because I think round numbers, a lot of people think in terms of round numbers, so your orders might not get filled on the off chance there is a wick to that level. So obviously this is a very bearish scenario. A price of 4,000 is a very bearish short-term scenario. But just know that stuff like that is on the cards in 2020, because ultimately what we're doing is we are just trying to accumulate Bitcoin during an accumulation phase for as cheap as we possibly can. So if it goes lower, look at it as an opportunity to continue to build your stack and preparing for the bull run to come, hopefully in 2021, 2022, peaking in 2023. If price continues to go higher, then I hope you're happy with the stack that you've already accumulated for the last couple years. So again, if you guys like the channel, please subscribe. Actually, there is one more thing I wanted to note. Ultimately, I've always talked about, when Bitcoin's below the 20-week, when you see a move down, Bitcoin tends to outperform a lot of other cryptocurrencies, and that's why I typically have most of my portfolio in Bitcoin during that time. And today's a good example. I mean, just looking at the move from Bitcoin, it's around 4.67% at the time of making this video. The price is 68.87. And you can see that basically for every other coin, obviously not stable coins, that the moves are worse, like 5%, 6%, 7%, 8%, and so on. So this is one of those ways that, if you're holding a lot of different altcoins, it's a way that Bitcoin can continue to just hammer your position in terms of its valuation with respect to Bitcoin, because altcoins tend to perform poorly when Bitcoin is below the 20-week moving average and has a move in the downward direction. And many of you might think that's obvious, but if you remember back to the end of 2017, Bitcoin was basically beginning its crash from $20,000, but then for several weeks, a lot of altcoins had their heyday and were going up 10, 50x. But at the time, Bitcoin was above the 20-week moving average. So that was a key difference. So take that into consideration when you're looking into your moves. Remember, this is not financial advice. This is just my opinion on the markets. Subscribe to the channel if you guys like the content. Check out the Telegram channel if you want to talk about it. And I also do have a premium newsletter I do put out every week. If you want to sign up for that, you can find that in the description below. That'll wrap it up for this video, guys. I will talk to you guys next time. Bye.